Let's get started. Thank you all. Thank you for joining us today, and thank you for being part of this important conversation. We have a great turnout, and it's a great opportunity to hear what's going on in the front lines of the pandemic as it is now cutting through the emerging markets. For those of you that are new to Accion and our work, I'm Michael Schlein. I'm the CEO of Accion. We're a global nonprofit dedicated to creating a financially inclusive world. We find, we fund, and we grow companies creating new ways to reach the underserved, and we advise financial service providers on how they can use digital tools to reach and better serve clients whom until now have been left out. In the past few decades, the world has made extraordinary progress in reducing global poverty and increasing financial inclusion. And Accion has been a leader in those efforts for nearly 60 years. Since 1961, Accion has helped more than 160 partners reach tens of millions of families and small businesses in 55 countries. Philanthropy from institutions and individuals makes our work possible. It allows us to take risks, try new things, enter new countries, create new products and services, all for our clients for whom the banking system has failed. I'm seeing many supporters are on this call, and I want to thank you for your belief and your support of our work. We couldn't do this work without your help. But today, I really want to talk about the pandemic, and we're seeing, generally I'm a pretty optimistic person, but I do think that all of that progress that we've made over the last several decades is at enormous risk. For the first time in my life, I am very, very worried that we are likely to see rising poverty and growing exclusion. Oxfam recently warned that COVID-19 could push 500 million people into poverty, and the World Food Program has warned that the pandemic is likely to double the number of people suffering from acute hunger. Before the pandemic, we knew that 3 billion people were left out of or poorly served by the global financial system. They lacked access to the basic financial tools that they need to save money, seize opportunities, or protect themselves from sudden emergencies. And now these people are even more vulnerable. They live in places where it is impossible to socially distance. They lack running water to wash their hands, and the public health infrastructure is weak on a good day. The situation is dire, and we need your help and the help of all of our partners on this call to do all that we can to ensure that our clients don't suffer unnecessarily and don't fall further behind because of the pandemic. Now, I'm very, very proud of our work. I'm very, very proud of our partners, and we're joined today by three of our best from around the world. Kshama Fernandes from Northern Arc in India, Taiwo Joda from the Accion Microfinance Bank in Nigeria, and Kurt Koenigsfest from BancoSol in Bolivia. First of all, thank each of you for taking the time. It's a great privilege to have you all here. Thank you for making the time to join us today. Before the pandemic, many of our partners relied on high-touch models to reach low-income and underserved populations. And they found digital tools difficult to use or problematic for cultural reasons. And now, and even in the early days of the pandemic, they are rapidly adjusting, our partners, these institutions are rapidly adjusting their business models and accelerating the adoption of digital tools like mobile apps and online tutorials and messaging services to stay connected with clients who are coping with lockdowns and social distancing. Accion is uniquely positioned to help our partners make this transformation and make this adjustment. We are leveraging decades of expertise in digital transformation and the application of data analytics, human-centered design, product testing, and more to ensure that our partners are confronting these challenges with all the support they need. I'm excited. I'm looking forward to hearing more about what these three partners are doing to meet this challenge. And so thanks again for joining us. We couldn't do this work without your support, and we need your help more today than ever. With that, let me turn it over to the Chief Operating Officer of Accion, Esteban Altschul.
Michael, thank you. Good morning, good afternoon, and good evening. We have an audience literally from all over the world, so thank you very much for joining us. And we're all fortunate to have truly three outstanding leaders in financial inclusion with us. So just a very brief blurb, and we'll get to the main course here. Why do we have Kurt, Kshama, and Taiwo with us? Bolivia, Nigeria, and India, and specifically BancoSol, AMB, and Northern Arc, are both countries and institutions of strategic importance for Accion. These are in many ways some of our long-standing partners, as well as important partners in our mission of inclusion and social impact. In addition, all three countries have some unusual similarities today. They each face, as many other countries of course do today, the most unprecedented historic crisis in the last 100 years, and certainly for financial inclusion, the most unprecedented crisis that we have ever seen. Each one of them has faced prior crises, but I think nothing like this systemic, structural, global crisis. In all three countries have not reached their peaks of COVID cases or deaths. They're all climbing up the peaks and not knowing when that will end. In some countries, like India and Bolivia, hospital capacity is nearing or exceeding its limits in a few cities, and unfortunately, health institutions are being tested to their limit. As it impacts us, what's suffering the most is our clients and their clients. Not unlike the US, it is estimated, and this is a broad, educated guess, that somewhere between 20 and 40% of small businesses will fail within the next year. And that will also be the case in India, Nigeria, and Bolivia. So Kurt, Kshama, and Taiwo face that unprecedented challenge of managing their institution and being able to serve the clients better than today when we come out of this crisis. So again, we very excited to have you. Let's jump right into the questions. Many of you have already sent us questions, so I tried to weave them into what I'm going to ask. But just as a starters, we've asked each of them to give us a short introduction of their institutions, where they're at, and to give us an initial flavor of their challenges we're facing. So I will start, as I usually do when I have Kshama with me. I will ask Kshama Fernandes to go first, not only because she's the lady in the panel, because you all should know, this is always interesting, she's the first Indian woman to sail solo across the Atlantic, and no one else in the panel has done that as far as I know. So Kshama, pleasure, and kick it off for us.
Okay, thank you. Thank you so much, Esteban. And thanks for having me on this panel. Always a pleasure to be associated with the Accion work and the panels. So let me just take like a couple of minutes to talk about Northern Arc. Northern Arc is a financial inclusion platform that basically enables debt for the underbanked in India. We've been doing this for the last decade or so, and over the last decade, we've enabled 11 billion US dollars of financing through our work for the underbanked financial institutions and businesses in India, and pretty much, reaching across 150 plus financial institutions, tens of millions of underlying borrowers, and covering, I would say, almost 90% of the country in terms of the underlying portfolio. So there's a lot of sort of reach that we have succeeded in achieving through our work and the support of many partners. Let me quickly come back to what we see in terms of the situation on the ground. Esteban, as you rightly pointed out, in India, the COVID situation is getting worse. We haven't yet reached the peak, and we don't quite have visibility on when we might. The number of cases, of course, are increasing rapidly. But what I really want to draw attention to in terms of the difference that has happened over the last couple of weeks is that the initial strategy, which was more sort of a nationwide strategy to deal with COVID, is today now beginning to become more local. State governments are stepping in. Local administrations are adopting different methods to battle the pandemic that sort of cater to specific geographies. So we are seeing kind of that distinction happening from when we had a nationwide lockdown across the board to now sort of being more geography specific. Many geographies still under lockdown. Let me just come to a few of the, I'd say, policy measures, and then very quickly where I see some of the, the sectoral issues in India. So the Central Bank of India, which is the RBI, did step in. There were multiple initiatives that were launched. I will not spend time right now talking about exactly the, the successful rollout of those initiatives at this moment because it's too early to say that. But they did, one of the big things that they did was to say that lenders should grant moratorium to their borrowers on loans. It did not extend to debentures, but on loans. And we're seeing a significant amount of the moratorium that has been availed. So to give you a broad, quick sense of the numbers, institutional clients have around 40 to 70% of our clients have availed a moratorium. A lot of the retail clients have availed moratorium. Microfinance institutions, it's a wide range of moratorium availment, starting from 50% by some of them, going up to 95% by others. Strangely enough, moratorium requests from small businesses in rural areas and other sectors which are considered essential have been on the lower side. So on an average, for example, small business loan entities are witnessing 40 to 60% moratorium, which is good, which is basically talking about these entities being able to do some of their business and make some of those repayments without moratorium. Strangely enough, consumer loans are performing better than some of the others. And I can, as we speak, I can talk a little more about this in terms of the numbers. On the vehicle finance side, again, the retail collections, as we are seeing this, is light commercial vehicles doing much better than the heavy commercial vehicles, precisely because they are operating in local geographies which are open, which are sort of responding to the current crisis in a slightly more positive manner. So, I mean, that's a quick overview, Esteban. At what stage should I go into the details is something that I will sort of be guided by you.
We will definitely go into the details and stories, and there's many. So thank you, Kshama, for the introduction. Let's go slowly around the globe, since most of us in Accion are in the East Coast. So we'll go to Nigeria next. And Taiwo, again, a pleasure to have you with us. Taiwo leads AMB, which is for many years has consistently won Best Place to Work in Nigeria, and is also a leader in financial inclusion in Nigeria and in the African continent. Taiwo.
Thank you very much, Esteban. It's a pleasure to be here. And I'd like to thank Accion International for all the support over the years. Accion Microfinance Bank Nigeria started business about 13 years ago in Nigeria. We started small as a state microfinance bank, and we've grown to become a national microfinance bank, serving customers over 12 states in Nigeria. Over the 13 years of Accion existence in Nigeria, we have disbursed about $356 million in loan to SMEs and to small retail businesses. And we have reached about 509,000 customers over the 13 years. Of course, the pandemic came as a root shock to us. It was not like it was unanticipated, because it came into Nigeria a bit slower than other countries. So we've had time to look at what was happening across the world. And by the time it really got into Nigeria, it was March of 2020 this year. And when it came in, of course, it has a tremendous impact on business, primarily because even when it started from China, imports over 25% of all goods and services into the country. In 2019 alone, China's import was $11.09 billion into Nigeria. And it's been growing year on year. So the immediate impact to our small businesses was the supply chain disruption. We had in December a lot of customers who had transferred money to China expecting goods and services, and they were not getting the businesses. And in our portfolio in Accion Microfinance Bank, over 60% of our portfolios are into food and drinks, they're into commerce, trade and commerce, and also education. And the food and drinks and trade and commerce were badly hit by the pandemic. So what we saw was an immediate cut in supply chain to our customers. And that means that customers had to go back to start depleting their stock level and going above the reorder level to begin to meet demand. Eventually, they ran out of stock, and we had quite a number of customers, about 11,000 customers, going into inactive state because they exhausted their goods and they were not getting new goods. They were not able to get new goods from Asia, from Europe, or from America. And then the government also introduced, in order to curb the pandemic, we saw some initiative by the government that also backfired. or boomerang for businesses. For example, intercity travels were stopped, and that also affects demand and the supply logistic for our customers who had to move in between states to get the goods and services that they had to need or they had to supply. So that was short-circuited. Demand was affected, supply was affected, and we have been very strong in education. We're driving a lot of synergy with educational institutions, and up till now, they're still shut down. So we expect that all schools will be on lockdown for an average of 8 to 9 months. And so it was a really bad thing for our businesses. But we have been able to improve and get ready through the works of Accion International and the active board of Accion to be able to reach our customers. So we have developed quite a number of digital channels to reach our customers. We're able to get them to still consummate their transactions using our digital channels. We did a quick survey, and what we noticed was that our female customers were mostly affected by the pandemic. Out of the survey we did, 62% of female customers, in terms of number and count, were affected, and their volume represented 52% of total volume, while just 38% of male customers were affected, and their volumes represented 48%. And you will understand why the women are mostly affected, because the survival instinct for women is very high. And so before they look at the business, they have to take care of the family. And so you see a lot of them try to divert funds to ensure that families are safe, to get all the necessary protective gears that their families will need. The passion to save the family was there. And so they were very badly affected too. Even after this month, the federal government of Nigeria announced a gradual easing, but we're seeing a spike, even in the case of the pandemic. And that shows that this is really a very difficult time, not just for our businesses, not just for our customers, but for everybody in Nigeria. I think I'll explain more. Thank you.
Thank you. Appreciate that. Next, we'll hear from Kurt Koenigsfest. Kurt is the CEO of BancoSol. BancoSol was co-founded by Accion, and BancoSol is known worldwide as the first regulated commercial bank for microfinance globally, and today remains a model for microfinance worldwide. I work with Kurt. I'm the chair of the board of BancoSol, and every year, before COVID, every year we have delegations from all over the world, China, Singapore, India, African countries, visiting BancoSol to learn how to put an extremely efficient model of serving the poor together. So Kurt, welcome.
Thank you, Esteban. Good morning. Thank you for the invitation. Let me start by giving you a little bit of background information on BancoSol today. We are an organization of 2.1 billion in assets, a little bit over 1 million in clients, in a population of 12 million. So it's quite significant in terms of penetration that we have today. We have been able to keep a very good rating, AA1 by Moody's and Fitch throughout the years. And before the crisis, we were showing returns above 20% on average for the last 10 years. And probably the most important, our portfolio at risk has been historically below 1%. What we have today in Bolivia is probably the most difficult situation, I think, ever, as in many other regions and parts of the world. This situation has started, particularly for us, in March. Around March 20th, the government declared a national lockdown with full quarantine. The only exception was health services food, supermarkets, food supply in general, and banks that remained open. Banks, because we were paying and we're still paying different bonuses that the state, the government is given to different segments of the population. And initially, by decree, the government declared a moratoria of 90 days on capital and interest. Later, by Congress, it was extended for another 90 days. So in theory, we're actually going to be collecting our loans in September. And that might change. We don't know yet, because as it was mentioned, we have not reached the peak in number of cases. We're about 20,000 today in Bolivia, and our health services are at a peak in terms of how much they can serve the population. So we might go back to a full lockdown, which was partially changed in the last 15 days. So definitely the consequences we're facing have to do with liquidity. We're not collecting loans, and because of the moratoria declared by law, even the good clients that were paying in the beginning have stopped paying. The second thing, of course, related to that in terms of challenges, has to do with the credit culture that we have created in the last 30 years. As you know, in microfinance, the contact, the monthly or weekly contact that we have with clients is key. And that's one of the things we're trying to do remotely through digital channels, but that has to do also with keeping credit culture. In terms of strategy, given this situation, the number one concern has been liquidity. We have gone to the market very actively. Of course, rates have gone up, but that's something that we knew what was going to happen in the market. And even though liquidity might be scarce, we're still lending. And we have about 30% of our clients active today in different activities. And we have also seen clients changing activities. And they have very creatively moved into what the market is demanding today. So they are selling gloves, they are selling masks, they are producing those items. So that's interesting to see. Unfortunately, it's not the majority, but we see a portion of our clients doing that. And we have also developed something that we had on a pilot program at the beginning of last year, which was remotely lending. So we are using credit scoring and also using basically our AAA clients that are active today in the market, and we're lending to them. Of course, to give you an idea, we usually disburse around 100 million per month. Today, under those conditions, AAA clients remotely lending, we are disbursing 15 million per month. So just 15% of the usual numbers. The other thing we're doing as part of our strategy is using very extensively social media to communicate the different products we're offering, to remain in contact with our clients, and also to promote our digital channels. We have seen a very interesting increase there. To give you some fast information, in terms of our app, for example, we see an increase of 95% in the period January-May this year, as opposed to January-May last year. Same thing on our online transactions, an increase of 35% on the same period, and a decrease of almost 40% in our branch transactions. So of course, because of the pandemic and because of the lockdown, people are not moving around that much. But this is one of the key elements we're trying to do, going more into digital, and the response from the market, as you've seen, has been very, very positive, even though there's much work still to do.
Thank you, Kurt. As usual, you got ahead of me and started answering. I wanted you to tell about those client stories, because one thing we often speak with Kurt, Taiwo, and Kshama is the resiliency of clients in the microfinance sector. And just like I said, it's possible that many of them, their current businesses may fall apart. We will likely see the vast majority, if not all of them, come back with new business ideas. So Taiwo, I wonder if you can share a little bit. We've had several questions from our audience sent in advance about what's happening to the clients, and what do you see in Nigeria? What do you see in terms of what clients are doing to change how they operate, and how AMB is helping in that, or how you're looking at that strategically?
Thank you, Esteban. First, I would like to salute the resilience of the Nigerian entrepreneur. I have seen a lot of initiatives evolving from the way they do their business. I'll quickly give you an example of a medical doctor who runs an hospital. He has been our client for over 6 years and has done 12 cycles of loan. Of course, when the pandemic started, the federal government encouraged everybody to stop visiting private hospitals and go to designated hospitals to have their tests done. And that is clearly reasonable, because most private hospitals are not equipped fully to be able to tackle the pandemic. And so this gentleman had very little patronage in his hospital. The first thing he did was to volunteer. He volunteered on a community service and started informing people and educating them about the COVID-19 pandemic. And the second thing, he turned a part of his hospital into a small factory and started manufacturing hand sanitizers, which is very critical for people to use. So he started selling hand sanitizers, and that is exactly what he did to sustain himself in the last 2 to 3 months. In fact, we're so encouraged that we also buy from him, from what he has produced. The second story that readily comes to mind is the story of a teacher. And because he runs a school, he owns a school, he also teaches in the school. And because we're very passionate about education, we reached out to our customers who have school. And the first thing we did to help them, because we know they're going to be worse hit, they're going to stay at home for up to 7, 8 months, was to give them a 180 days moratorium. And we gave this to schools, and not just moratorium, but also extension in the tenor of loan with the same amount of the moratorium that we're giving. So we extended the loan period. We also gave them moratorium at very reduced interest rates. And you see from the pressure, you could see excitement in her. And shortly after that, she started an online training for our students. And I was happy to see her move from, I was happy to see the transition from someone who was going into despondency, into frustration, to becoming very happy and using initiative to drive the market. And those two replicates and resonates the kind of resilience we have seen among the customers of the bank. What I have seen among the SMEs is that mostly, most of them will need funding to jumpstart. I mentioned earlier the survey we did. After the survey we did, we took 1,000 samples of customers, and we realized that 17% of samples are not sure whether their business will survive this COVID-19.
Right.
They're not sure. So what we have done in the last 2 months was to bring in subject matter experts on SME to engage them and to tell them how to restart their business, how to strategize with their business, And we're identifying the people in the 17% bracket, and the bank is going to fund, Accion Microfinance Bank is going to fund a special training for them to be able to restart their business. And we're going to see how we can partner with them to make funds and liquidity available for them to be able to start a business in the right direction. So we see a lot of feedback. And one thing we're not taking very lightly is communication. And so we communicate again. We're over communicating. We've had 3 sessions. Tomorrow, we're going to have a meeting with all our SMEs, and it's just to hear them out. And in fact, one of the directors, non-executive directors of the bank, is going to share the meeting with the customers to tell them we care, to tell them that we're ready to hold their hands and navigate this rough time together. So we're having that tomorrow, and that's going to be the third we've had in 1 month. I will continue to do that. The other thing we did was we had over 100, we have 92 branches. So we have over 100 staff, all branch managers and supervisors attend a crisis communication workshop. So how do you communicate effectively during a crisis period? And they went through that because we want them to be able to engage our customers in the best way possible. We know there's going to be a lot of, there's a lot of challenge out there. There's a lot of fear out there. And so you don't just want to go and meet a customer and say, when are you paying? You want to go and see a customer and show empathy. You want to go and see a customer and say, how are you doing? You want to go and see a customer and say, how can I help your business? And then they respond back positively to us. And that's what we're doing.
Yeah, thank you, Taiwo. We're seeing that in many of the Accion-related institutions. Kurt is doing the same. Maybe switching gears a little bit, Kshama, you mentioned in your introduction, new products, services. Maybe you want to touch on that, and related to that, many institutions the likes of AMB or BancoSol inside Bolivia look at you, look at Northern Arc, and they come to you for liquidity, help, and assistance. So maybe you can touch on both of those items together, because you're in a tough position in that regard.
Yeah, no, absolutely. Happy to. So, like you said, many of the clients we are working with are institutional clients. And, these are hundreds of institutions in India that actually do the last mile credit as far as the underbanked sectors are concerned. And clearly, I mean, all of them were in a spot of sorts, right? Because they absolutely had no choice in terms of offering moratorium to their retail borrowers. But not all of them availed moratorium from lenders to them. So, and end of the day, as an NBFC, the asset liability, is an important aspect, and no NBFC really keeps liquidity for very, very long periods, right? So maybe 2 months, 3 months, nobody keeps liquidity for longer than that. So I think a lot of these institutions were in a very peculiar position where they understood their retail clients' requirements and had to grant moratorium to their retail clients, but back to back didn't immediately avail moratorium for themselves. So I think in the initial days, there was a lot of discussion around how do we avail moratorium, what is going to happen, how is the ALM going to look like? And to us, the discussions were twofold. I mean, to begin with, the discussions were all about liquidity. Is there enough liquidity? Are some institutions going to default on their commitments to lenders and so on and so forth? But going forward, we are seeing the situation pan out. It seems that in the immediate short run, the clients have managed their liquidity fairly well. They have availed moratoriums from, I would say, about 70% of their lenders. To some extent, the moratoriums have not been availed. And we will see some of the pressures coming up. And, there will be some institutions that will then move on from facing liquidity challenges onto facing solvency challenges. So that's kind of the situation on the ground. In terms of specific products that Northern Arc has worked on, we are, of course, at this moment doing a lot in the sector. We are working with all of these clients to look at how might we do multiple things. One is, of course, to whatever extent we can extend moratoriums, we have done that. We are doing small amounts of loans. We continue to lend, especially to clients where we see that it's a short-term liquidity issue and we would want to step in and help them at this moment. But I think most importantly, there's one particular direction that I want to point out in terms of what we've been working on. Northern Arc has done a lot of pooled issuances, right? So whether it is securitized products, whether it is pooled loan issuances and so on and so forth, that structured finance bit is really what we specialize in and understand very, very well. And largely what we've done in the last many years is doing that from the client perspective. Interestingly, what has happened post the COVID is that a lot of investors have reached out to us and said, look, you know how to access the Indian market. You have these networks, you have these connects with many, many underlying institutions. Can we work with Northern Arc to really pool together the investor monies now? So you see what I'm saying? That we are today working with many, many investors and hoping that in some of these structures, we will very efficiently pool not just clients, but also pool investors. And to my mind, that will be a fantastic way to really optimize our access and really efficiently be able to deliver a solution that needs to be delivered now. But as you can imagine, these are not easy structures to pull through, right? Because we are doing pooling of not just clients, but doing pooling of investors across the world. So we are having conversations with many DFIs. We are having conversations with many foundations. Quite a few of those foundations have come forward and said, how can we really contribute towards what is happening on the COVID situation in India? So some of these pool structures are what we are looking at. We are looking at both kinds of structures, simply where there is a transmission of flow of capital that happens directly. And then there could also be pool structures with guarantees and so on and so forth. But to my mind, that's the most interesting thing that has happened, where we have investors today all coming together and saying, instead of each investor reinventing the wheel and doing their own thing, can we really put all our minds and our money together and see how we can create maximum impact? So that's an interesting thing from a structuring perspective that we are working on right now, Esteban. I can speak, in more details, but I'm aware that we have limited time. This is the most interesting thing that we are currently working on.
Thank you, Kshama. It's fascinating, and as always, you and your team very creative and innovative, and I'm sure we will continue to see that. Kurt, we are getting many questions. We have a mixed audience of some of our audience is very knowledgeable of financial inclusion microfinance, some are less so. And I think for both of them, trying to put the two together, Kurt, what's unusual about this period that we talk in every board meeting, in every week, even also with Taiwo and Kshama, is this unusual situation of the moratorium, right? So people are asking us, well, how do you, what's defaulting, what's not defaulting? How are you dealing with that? Obviously, in very simplistic terms, maybe you can explain that, how the financial statements look beautiful, look better than ever, but they don't show the quality concerns that we're going to face. And all of us in Nigeria, India, and Bolivia, and other countries, we're in this suspension period, that we are in this moratoria where clients are not paying. In the case of Bolivia, pretty much not paying anything. India, Nigeria, some. And we don't know the day after, the day that the moratoria is lifted. In Bolivia will be hopefully September. How are you preparing for September? So maybe briefly, if very briefly you can explain this dichotomy between the financial statement looking great, but not knowing what the quality is, and how do you prepare for the day after, not knowing what the portfolio at risk will be?
Yeah, well, we follow the financial regulation in Bolivia for our financial statements. And that means that we work by the accrual method. So as you mentioned, we're basically not showing the real situation we might be facing starting September. So our financial statements look fine. Our portfolio at risk is less than 1% as it was as of February or January. We're basically showing interest as if we were collecting that money, which is not the situation. So everything looks fine. Our return is also very healthy, but we're gonna know the real situation once we go out and start doing the collections. Since we have the liquidity, as I mentioned before, we're also lending not as actively as we would like to, in order to keep the interest income coming. Also very active in the other operations of the bank that represent revenue in terms of operating income, collecting taxes, debit cards, online transactions, and so on. But then, as you know, for a microfinance organization, probably around 90% of the income comes from the lending. So what we're doing every month is basically in our financial statements, we're taking voluntary provisions that we're hoping we're not going to be using all of them, but we're creating these reserves because we know that many of our clients are not going to be able to pay. And so this fund, this voluntary fund is one of the things we are creating to face that. Also, we are ensuring that we have enough liquidity to do refinancing, rescheduling, because we know that our clients are not only not able to repay, but they are going to demand more working capital. So for that, we're also preparing in terms of liquidity to be able to serve that demand. And we know that right now, this year is going to be a totally different year from the ones we've had in the past. And so we're trying to show a lot of flexibility in terms of our clients, showing them that they're going to have the support and not only in words, but in actual actions, giving them more capital, rescheduling their operations, refinancing. So very flexible in terms of our operations. And also on our deposit side, let's remember that in our case, we're funding about 85% of our lending from deposits from the public, through deposits from the public. So we're also trying to send the right messages for all of them to stay calm, to know that the bank has enough liquidity, has the strength to face this difficult situation. And also we're working with the authorities, which hasn't been that positive up to this point, unfortunately. We've seen other experiences in other countries where governments have taken very early and very positive actions in terms of putting a lot of liquidity in the economy in general. We know that Bolivia's situation in terms of monetary policy and reserves and the strength of the economy, of course, is not comparable to other countries of the region like Chile or Peru. But still, we are very much concerned that we are not seeing all the support and all the liquidity and other mechanisms coming into the scene as of this point. So we're basically taking internal measures in terms of our depositors, our borrowers, and prepare for September.
Thank you, Kurt. Taiwo, perhaps you already commented a little bit what you're doing in terms of communication and staying in touch, but following what Kurt was saying, how do you see Nigeria 12 months from now? How is AMB preparing for that day after? And perhaps you touched a little bit what you're doing today on digital transformation, but perhaps as you think of 12 months and beyond, you can comment a little bit of how do you see AMB in 2025 and how are you preparing for that, for perhaps a very different world?
Thank you very much. Very interesting question. Let me just quickly touch base on what we're doing with customers. Like some of the said, it is when the tides goes that you know we're swimming naked. And so what the position we have taken is first to be very true to ourselves. And so the customers we have granted moratorium are customers that are doing very well before COVID-19. So we didn't extend moratorium to all customers. We're able to look at the risk rating of each customer And customers that are not doing well prior to that, we're just working with them to get by. And that means so that we don't create a bubble come July, September, or whatever. So we've done that. We've also worked with our external auditors on the expected credit loss model. We have tuned it to what is going to happen with COVID-19. And so we're just remaining true to what the environment is doing. Yes, we're driving a lot of activities on our digital channels. So we're making a lot of channels available for our customers for use. And I must thank Accion International and MasterCard for supporting us in driving our digital initiative. They've been very wonderful in the last 2 years, and we're still working together. So we've rolled out our USSD, we've rolled out our internet banking, we're driving our agency banking, and we're also creating a wallet for the customers to be able to use. We've seen a lot of customers onboarded onto our digital channels. And we've seen a lot of customers who are very excited about being able to be served remotely. So what is the opportunity for the future for us? And again, we started working in anticipation of the future. And before the end of this year, we're going to release a digital loan product into the market where customers are able to attract loans and consummate it from the comfort of their homes in very remote locations. The second thing we have done is we're also introducing a top-up loan. So for customers, so instead of having to go through the process of filling forms for renewal, your loans can easily be top up. We also have a digital field application tablet, which we have remodeled, and we have also included additional features to make customer experience very, very good for our customers. So we see the future of digital. We're also driving a digital savings product that we're going to introduce next month. It's called a Save Brighter. It's also going to allow people to save digitally. Where do I see the future? Now, Nigeria is a peculiar case. Apart from the pandemic, we also have the issue of the devaluation of the naira. And what that means is that there is huge opportunity for funding. SMEs are going to require a lot of funds to come back, to reinvent themselves, to get themselves back into the business. Locally, we've been able to raise funds. Interestingly, in the last 2 months, we've raised substantial funds. We're also working with international and multilateral agencies who are excited about what we're doing and who also want to participate. I think staying liquid is very critical. Protecting shareholders' equity is also equally important. I mean, what I tell people is that the profit will come. What is important now is to get the business right, and that's what we're doing. And so there's going to be a lot of opportunity for business growth. There's going to be a lot of opportunity for customers to bounce back, but there will be a lot of requirement for the funds, intervention funds, donor agencies, reasonably priced funds to intervene in the markets at this point in time, in the medium and in the long term.
Thank you, Taiwo. And I appreciate, for the record, we didn't ask you to thank Accion or MasterCard, but yes, we thank you.
Thank you.
Kshama and Kurt, as we begin to close, also your thoughts on the future. Kshama, India, I always say, is the epicenter of financial inclusion, not only because of the large population and the tremendous needs of a very large population that's excluded from the formal financial system, but also because of all the digital transformation taking place in India with the types of institutions we're talking about, also, of course, fintech. So I haven't asked you this question before, but how do you see the future of financial inclusion in India? What do you foresee will be different 3-4 years out?
That's right. So, so let me just start with, the stating the fact that, me and particularly Northern Arc is a very firm believer of the credibility of the borrowers at the bottom of the pyramid. We've seen this in many, many instances. And, we've recently, sort of published a a set of data that talks about how do these institutions and the underlying borrowers respond during extreme strenuous pressure situations like the demonetization, floods, cyclones, and really situations that completely disrupt their lives. Of course, none of us have seen anything as severe as COVID in our lifetime. But nonetheless, in a very small local geography, when a cyclone hits, lives of people in that geography get as badly disrupted as all our lives have got disrupted in COVID. And we've seen them bounce back in a very, very big way. This is not just anecdotal, this is very much what the data shows. So my belief and my confidence is that we will start seeing a behavior of that sort come back. And I have great confidence in particularly the small and medium borrowers. Our tier 3 and tier 4 cities is where the recoveries will happen first. These are traditionally geographies, these are traditionally borrowers who are considered risky. But I think that's really where the revival will happen. So I think that's one part of it, which is basically what has the data told us in the past, and my belief that we will start seeing a repeat of that behavior going forward. I think the most important thing really is to recognize that if this is what is going to happen, then we need to have capital flowing in that direction to make sure that this can happen when it is required. So more than sort of making sure that businesses and borrowers revive, we also need to make sure that the investor community revives and starts taking those calls on these underlying sectors. And that's really the role of Northern Arc. We are in conversations with many, many investors today, both equity and debt investors, to reassure them that this will all come back. So if you ask me, where do I see this going over the next 2-3 years? I think there's going to be a lot of pain before we bounce back. But we've seen so much of this bouncing back, particularly in the sectors that we work in, that I have complete belief that these sectors will bounce back in a timely manner if we provide them the support that they need, because it's not, they can't walk that entire journey alone. And, while they do that, we ought to be sort of from a capital perspective, both debt and equity, be able to support them. And I think that's going to be the biggest sort of role for many of us to play in that journey. Very quickly, like I said, there are many, many clients and there are many institutions where we see liquidity challenges. There are some where we see challenges of survival, which is basically solvency challenges. And I think we will see some of that playing out over the next 2 or 3 years. The strongest will survive, of course, but we will see some consolidation and we will definitely see some entities not being able to survive this. But overall, I mean, maybe it's probably just because this is me and this is me coming from Northern Arc. We do have a very positive outlook in terms of where particularly these sectors and particularly sectors in the tier 3 and tier 4 geographies will end up. We will survive. I have absolutely no doubts in my mind.
No, thank you, Kshama. And that's a very good point, because we're talking to three of you literally among the strongest institutions globally, literally in financial inclusion. And I am certain the three of you will survive and thrive. But as I have no doubt either. But as you also just said very quickly for the audience, we do expect tens, globally hundreds of institutions to fail. The smaller institutions that are serving the poor, that are not as strongly equipped financially and with shareholders as the three of you are, will have difficulties, and there'll be some consolidation and some failures. And that's where we need support of everybody, and we need to reinvent the sector together. So Kurt, you'll have the last word. For the last 29 years, BancoSol has been literally a global model in microfinance and inclusion. So how does BancoSol continue to be that global model? But beyond BancoSol, how do you see the future changing, probably significantly over the next several years, for you and for your clients?
Well, I see technology playing a very important role. During this pandemic, we're seeing both clients and our organizations working a lot more on this area. Before it was, something, it was nice to have ATMs, your app, your online banking. It was like a part of your offer. But today, I think clients particularly are valuing a lot more this way of transacting, this way of reaching your organization. So I see a lot of movement into that direction. So that's going to create some pressure on our own organizations in terms of having the best technology, in terms of attracting key people that can manage and that can develop those solutions. I see a lot of need in terms of efficiency. We're going to have to be able to reduce our costs because of lower margins. I see a need of cross-selling. Share of wallet is going to be definitely something that we want to do more. Maybe the other side of all this digitalization technology coming into microfinance is going to be how we remain close to our clients. Because as we know in our models, we basically have face-to-face interaction, daily, weekly, monthly. How do we manage that with technology? That's one of the things that we need to face and that we need to answer. I also see opportunities in terms of consolidations, bigger organizations, merging, buying, because of the smaller ones not being able to come up of this difficult period. The other thing that we're already seeing is how we can train our own staff in being efficient working remotely. The pandemic situation has shown us a new scenario. Usually in Latin America, in Bolivia, people are used to going to offices and have a routine and then maybe doing zero work from home. And now this is something that we are training our people, making sure that they have the proper connections, the proper hardware and software at home, and also being productive from home. Again, in the Latin American culture, when you're at home, you don't work. and now this is something new, and people have difficulties really trying to remain efficient. So that's another thing that I see changing. People being able to work from home and being efficient from home. So lots of changes, but many of them having to do with technology, definitely.
Well, thank you very much, Kurt, Taiwo, and Kshama. We're coming to an end. We really appreciate you joining us. It's been terrific. A few closing words that you made me think through your comments and some of the questions. We had a question of somebody who asked about our work, Accion's work in the US. We will be sending all of you some links to that. Accion does do some work in the US. And of course, this country is facing also enormous challenges, and that we are playing a role, particularly in the sector of small businesses. We will be sharing with all of you some information about that. And as big as the challenges are in the US, I hope you can get a flavor that the challenges are just as big, if not larger, in emerging markets. As Michael said at the opening, we do risk, literally, if we haven't already lost a couple of decades of progress in poverty and serving those who are excluded from the financial sector. And Accion's mission is to continue to help them. So as we talk about that 30% of small businesses that will disappear, Accion and the partners here, AMB, BancoSol, Northern Arc, and others, will continue to focus on reinventing that so that that gap shrinks and those people who lose their jobs and their businesses can reinvent themselves into something better over time in the future through technology and other means. And we certainly count on all of your help, support, assistance. There's many of you in the audience who work with us in different ways, investors, donors, partners, funders, and we really need your help more than ever. And as Kshama said, we're confident that the future will look brighter over time following this historic crisis. And just to close, let me introduce my colleague, Brian Clancy. He's the Senior Vice President of Resource Development. And Brian will have some closing words. And again, Taiwo, Kurt, Kshama, terrific. Thank you for joining us. It's been a pleasure. Brian.
Thank you, Esteban.
Thank you so much.
And thanks to everyone on this call, on the panel. My job and my team's job is to make sure that we have the resources necessary to support amazing leaders and amazing organizations like the three you heard from today. But we actually have a community of over 100 key stakeholders that we work with that include banks like this dedicated to supporting low-income people, the majority of whom are women, the vast majority of whom are persons of color. But we also work with fintech organizations. We work with policymakers to make sure that governments make the right choices to ensure that their efforts help people at the base of the pyramid. And again, there are so many ways to help us. We're going to put up some links now about our donate page, but also a way for you to sign up for our emails on an ongoing basis and become aware of other programs we're doing, including additional webinars in this series. We're also going to provide a link to what we're doing in the COVID-19 space across a whole series of countries. We're involved in over 40 countries in the world. I also want to give a particular shout out to our current donors who are on the line, some of whom have been with us literally decades. And I'm not going to name the person because he probably wouldn't be comfortable, but we have one donor who's been with us since he was 10 years old and been supporting us consistently through our mission. We can't tell you how much we appreciate it. It's absolutely essential. We're an NGO. We need the resources to help the incredibly talented folks out there who are facing unprecedented challenges. For those of you who are not currently part of the Accion family, we actually call ourselves Accionistas. We invite you to join this family and go on this journey with us. Go to our website, explore, definitely sign up for the our messaging and our outreach over time. And we also hope that at some point you will consider becoming a donor and becoming part of our family. There's never been a moment where your support is more needed, and we appreciate the work many of you are doing in this space all around the world already. And we look forward to helping the people we exist to serve not only weather the storm, but thrive and flourish on the other end of it. So thank you all so much for your time, and wishing you and your family safety and well-being going forward. Thank you.
Thank you all.
Thank you.
Thank you very much.
Thank
Thank you,
you.
everyone.